today's video, I'm going to cover BlackBerry stock because I want to go over the Needham Conference, the 27th one that was on January 14th, 2025. I'm going to go over the key points. Highly encourage you to rewatch the conference or watch it the first time if you're investing in the company, because I might have missed something. See, these are the key points that I think they're key points, and then I might have misinterpreted something. It's about give or take 30 minutes, so it should pop up right about here. I do have all the other conferences too as well if you want to sift through them. But I'm going to go over as well in terms of technicals a little bit. Plus, in my opinion, what happened on January 17, 2025 in terms of the stock was roughly about, give or take, almost $4.30. I think pre-market was, but essentially opened, went up to $4.29 US, and then started dropping down. I already knew, in my opinion, I think it was going to go under $4, but I'm going to share my opinions on all stuff. Now, quick thing though, please do your own due diligence and research before buying and selling, because I'm not a professional. So be mindful of that, and be mindful that I do own shares in the company. So again, be mindful of that while you're watching this video. Now, a couple key things before I get started. The earnings target date for Q4 earnings for fiscal year 2025 is approximately April 2nd, 2025. This is just an estimate, planned earnings date. I will be releasing a video later on in terms of what you can expect for this earnings for Q4, and as well as live streaming it. So if you want to be notified when I do upload the video and live stream, consider following and subscribing so you'll be notified when I do. And if you find this video beneficial towards the end, consider dropping a like. It does help the channel. So thank you so much for that. I do appreciate it. Now, before I get to the technicals and in terms of my opinion on what happened on January 17th, I'm going to go over the key points. Again, highly encourage you to watch the video fully in terms of the conference. This one too, obviously, hopefully, thank you so much if you do. But in terms of conference as well, because again, might have missed something or misinterpreted. So they shared 5 key things for this talk. I'm going to show the slide right now. And basically the 5 things were strength in portfolio, fundamental business strength, sustainable margin expansion, enhanced cash flow profile, strategic capital allocation. And then they mentioned the Silence deal in terms of they sold it to Arctic Wolf. But something to note, they are expecting the Arctic Wolf to IPO in the next year or two, which is pretty exciting stuff, actually, pretty awesome, and I'll explain why soon. And then the business is growing pretty well, and BlackBerry now has a vested interest after the deal of Silence in getting some shares with the deal. Again, if you remember, they got 5.5 million shares with the deal, and I believe during the earnings conference call, they stated that the valuations between potentially, and I think they're being pretty conservative, somewhere between 20 to 50 million, if I'm not mistaken. But if you do the conversion, 5.5 million shares with what online sharing in terms of what the valuation of Arctic Wolf could be as of December 14th is about $8 per share. So if you do the multiple, if I'm not mistaken, it's 5.5 million shares times $8 per share is about give or take $44 million if I'm not mistaken. And again, the company's worth, I think, let me see, does it show right about here? Potential market cap of $4.14 billion and growing again. Again, it's in the cybersecurity sector. And if they grow and substantially, again, within the next 1 year or two, in my opinion, potentially the valuation could be doubled in terms of what BlackBerry owns. Potentially. It's not a guarantee, or maybe even tripled, but let's try to stay a little bit conservative. We're expected to grow, which is pretty awesome. And we're expecting that portion of the investment to grow. Also, online sources are showing target date for the deal to close for Silence and Arctic Wolf to potentially close possibly on February 3rd, so coming up soon. And then one key point, every major chip manufacturer standardizes their software on BlackBerry's software for the autonomous driving. They mentioned that, which is pretty awesome. So that's Intel, AMD, NVIDIA, Qualcomm, so on and so forth. This is ideal to know since, yes, it'll still take time when we get there, but it shows BlackBerry is the key player in this. And we see that it is we see that in the growing backlog. So the backlog is pretty close to $1 billion and growing substantially. And they talked about the QNX backlog and mentioned that the long life cycles of the contracts, which reminded me about the auto sector. For the most part, since these business contracts are long life cycles, they tend to not switch from one company to another unless the one company they are working with is doing a pretty horrible job. So I have experience in the auto sector, and from my experience in the auto sector, essentially from these suppliers and all stuff, there's contracts and they are long life cycles. You tend to not renew these, you tend to renew these contracts because you don't want to work with another supplier because technically it's starting from scratch, right? It's a little bit easier with the workflow to go with the same supplier. And even sometimes if they don't do a great job, but it depends. But if they do a horrible job, they tend to get axed and a new one the auto sector tends to look for a new supplier and so on and so forth, right? But if they're not doing a horrible job, which in my opinion, I think BlackBerry seems to be doing a good job because the backlog is growing and we're seeing continuous growth from that standpoint. So, well, actually, technically the backlog is new business, but from the retainment of other portions of the business, I think they tend to do a good job with working with companies. And if that is the case, hopefully that translates well within this in terms of this business of QNX, specifically for the backlog. And then we'll see the backlog growing, plus these contracts getting renewed after the long life cycles. And the long life cycles, again, they're about 5 to 10 years, give or take, which is pretty awesome stuff, right? Again, backlog's growing and it's close to $1 billion. And then later on, it also sounded like they are running like a well-oiled machine. Again, that's just my opinion. We know that they did cost cutting, but still doing a great job in growing the business and improve cash flow with more cost cutting where they see fit. And it's important because where there's cost cutting, sometimes you're a little bit worrisome about potentially hindering the growth of the company. But yet we're seeing the company grow pretty decently, actually, in a good pace. And yet they did cost cutting and potentially seeing more cost cutting in the future where they see fit, which is awesome. Again, lowering our cost, and if we increase our profits, then we have more cash on hand, which we could use for potentially more or potentially share buyback or more growth in terms of company, in terms of research and development or mergers and acquisitions. But also after the silence deal is done, they'll have more cash than debt in the books. They stated that, and I'm going to show a slide right now showing some of the information. And then they had $200 million in debt to shares contract. If you remember, they sold $200 million. Could be converted to shares later on, which I think most likely will be. But again, after this deal, essentially we'll have more cash on hand than debt. So which is pretty awesome. That's great. And then they mentioned the structure of the business, which we know is QNX, security communications, and the patent licensing. Before, if you're not necessarily not new to the investment, but like before it was IoT, cybersecurity, and then the patent licensing. Now it's rebranded IoT to QNX, and then sold off Silence for the cybersecurity portion, and now security communications, and then patent licensing, like I mentioned. Which also they reminded us about the revenues still expected from the past patent sale profit share. If you remember, they sold a bunch of their patents, and they said that BlackBerry still could get up to $700 million of gross profit. So more payments from that are on the way, which is pretty awesome. So, which is great because if after the Silence deal, we have more cash on hand versus debt, plus more cash coming from this, the company becomes stronger and stronger. And if the management team keeps improving the way they are in terms of trajectory, I'm pretty excited about the company, which is pretty awesome. And we have more growth for the share price to keep going up if that it keeps showing fruition throughout the whole entire time. And then all legs of the business are positive cash flow now, which is awesome. Before, the cybersecurity side was the one side that was not cash flow positive, but now the whole entire company is moving cash flow positive in terms of all their divisions. Primary focus for BlackBerry will be QNX and more cost cutting coming where they see fit. Where they see fit. And then possible share buyback was mentioned again. Again, it's possible, but they mentioned again, which is pretty awesome. And then possible merger and acquisition for other verticals of QNX with the extra cash coming in. I will share this. Some people are a little bit against the share buyback. I think to me that shows confidence that the share price is quite low. So they're buying back the shares while it's cheap, and then they can sell them later on. Or also the thing is too, if the share price does increase substantially, they did share buyback, let's just say, right? And because we always want to have them invest in the company in terms of research and development or mergers and acquisitions. But for example, the mergers and acquisition doesn't guarantee growth, right? Like we saw with Silence, they bought this merger acquisition, but yet did not really bear them that much fruit. But they essentially, when they first bought it, though, they said they bought it for the patents, the patents to use for the other portions of the company, which is beneficial. But again, we want to see it to bear more fruit than the investment itself in the beginning. And maybe it did, maybe it didn't. Who knows? It's hard to tell. You have to look into the full details. But in terms of share buyback, they buy back the shares. The share does increase in terms of price, right? Like the share should rise, obviously, with the share buyback. And then that might create some excitement because then other people might buy shares as well, and the share price might increase more. Then they could take loans off of in terms of potential future shares, right? So it's not basically dead money. It actually helps out the company, in my opinion. This is just my opinion. But they could always take out loans, all that stuff. And if they see that the company is undervalued in terms of current share price and they buy back the shares, that loan they could take out could be at 5% interest rate, right? As opposed to the company's undervalued. Like, for example, if they did a share buyback at $2.30, $2.50, when it was clearly undervalued, in my opinion, they would have essentially already doubled their money, right? At $4.17, give or take, right? Not exactly, right? But then took a loan on 5% interest rate. So that's my take. And again, be mindful, I do own shares in the company, so be mindful of that while watching this video, and not a professional too. And then it sounds like they want to maybe at one point grow their IP revenue. So I'm going back to the points, by the way, for the conference. So it sounds like they want to maybe at one point grow their IP revenue coming in, but that's just what it sounds like to me. So I could be wrong. This is good news. So essentially, give or take, the IP revenue licensing that comes in, usually it's somewhere between, I want to say maybe 6 million, but sometimes 4 million, 10 million, 15 million, which is good. It's nice profits coming in for the quarters. But if they could grow that, it's amazing. And it almost sounds like they kind of looking to do that as well. So that's essentially good gross profits money, like per quarter coming in. Now from the Q&A, to me, BlackBerry made it clear that the two division split was also made to make it easier for selling off portions of the company when need be, rather than one company that does everything and was hard to sell off portions when the positions were not clear on how to split exactly sell off, since everything was so connected. The reason why I'm mentioning this is because it provides us additional insight as to why the division was happened. Yes, to obviously provide more focus in terms of divisions and provide more clarity on terms of how the profits are coming in terms of revenue and all that stuff in terms of split, but it provides more clarity as to why it was happening, so we know that portion of the company is expected to sell, like we saw with Silence, right? Because if you split them off in terms of divisions, you see in the balance sheets how much revenue is coming into each division and all that stuff. And then to splitting off, it makes it easier, like it was mentioned, since everything was so connected. If everything's so connected, it's kind of hard to split up the company because you're like, okay, what portions do we split up? But if you already did the division splits, then you kind of make it easier for everything in terms of clarity of how much revenue is coming in for each division. And in terms of splitting it, it makes it way easier, right? So overall takeaway for me is that the management teams are doing a great job so far in keeping their promises on what they plan to do. So overall, pretty excited for BlackBerry's future, in my opinion. It's still growing to the upside, all stuff. Again, earnings is expected for Q4 on April 2nd, 2025. This is just the planned earnings date. Again, we'll live stream it and have a video out sometime in the near future before obviously Q4 in terms of what you can expect. Now for the technicals, before I get to the technicals, actually, I do want to share, in my opinion, I'm again not a professional, but I do trade in the options chain too. So on Friday, January 17th, in my opinion, what I think happened was we opened at not opened, but went up to $4.29, give or take, if I'm not mistaken, and then started slowly coming down. And if you do trade in the options chain, you're familiar with, if you do leap trade contracts, like for example, if you want to trade 2026 contracts or 2027 contracts, predominantly January is the only one that's open, and it depends on the middle of the January. So January 17th was one of the leap contracts, and given that the share price did climb up substantially, potentially somebody, a major player, could have wanted to keep their shares instead of losing their shares. So for them to not lose their shares at a certain strike price, it was about $4 in my opinion. And once it was coming down slowly, I knew, in my opinion, I was expecting this thing was going to close under $4. And if my calculations were not wrong, I was actually hoping to upload the video over the weekend of that weekend, but the problem is I was too busy and I wasn't able to during the time. The reason why I wanted to upload the video was to state that if I'm correct, it was artificially pulled down. Again, to each their own, obviously, because they're taking a risk to do what they want to do. And essentially they were shorting the stock to bring it down to a certain strike price, and therefore they don't lose their shares. And then later on, they could climb back up, which is essentially what happened. Not necessarily as strong, right? Because even if they close their positions, from my calculations, let's say it would take about $90 million when I calculated during that time, about $90 million to drop it from the high, let's say $4.30 to the under $4, which would close at $3.99 and $3.98, give or take. Can't remember 100% exactly, but it was about $90 million if I'm not mistaken. But they don't need to short it $90 million themselves. They just need to fill those orders as they're coming in on the lower strikes. And if they keep filling those orders and hitting them, then the ask and bid keeps dropping, where let's just say it was again $4.29 and it dropped down to like $4.15 by midday. Some people might get worried and they're like, oh, this thing is just going to keep going lower, which it did go lower, right? So then they themselves sell. So whoever is a major player, right? It could have been two people, like not two people, but two major players, right? They could have been at this at the same time too, trying to protect their shares as well. So it's not just one major player. So they're filling the orders, like hitting the orders as they're coming in. And then let's say people like me and you may potentially panic and then sell at $4.15. Well, they don't need that full $1 million to short, like in terms of capital to short stock. Again, my calculations might be a little bit off, or like a decent amount off, but the fundamentals, I think, essentially are correct if what I'm stating did happen, right? It's not a guarantee, obviously. But basically, I want to state that if I'm correct, it's just basically artificial pull down. Again, nothing crazy, but that's the case. But either way, they pulled it down, and then other people are selling in terms of retail investors, whoever it might be, and it doesn't have to be just retail investors selling. So that way, you need less than $90 million to pull down the shares, pull down the share price down to under $4. And what we saw at the end of the day, which I was expecting, to be honest, was to close under $4. And we did, was close at $3.98 or $3.99, if I'm not mistaken. Again, US, right? So the reason why I wanted to upload over the weekend was to state that artificially pull down. Don't worry too much. Expect to bounce back up, which we did see. Again, not substantially. Let's just say even they did close their shorted position, which we don't know 100%, because we don't know if that necessarily happened, and we don't know if they necessarily closed their whole shorted position, but I'm assuming they probably did if they were to do this play. And then they bought back the shares. And the fact that it only went up halfway means they only needed half the capital, if I'm not mistaken. And the other half is just other people panic selling. So they'll probably potentially come back in or not. We'll see. But I think the company's moving in the right direction. Ultimately, we're heading up. And now for the technicals portion. So that's just more of just my opinion. And in terms of the technicals, I'm just going to show some stuff. So if we look at the 1 year chart, again, we close at $4.17 US. In my opinion, I think we're heading up more higher. Right now, for the time being, this is the MACD line for the 1 year chart. It is in the bearish movement, technically indicating further downside potentially, but I don't think that will be the case, because if we see the volume for the overall volume, it has been more in the buying side and has been slightly increased and a little bit flatlined. We have to see until this data point ends if it's increasing. But then if we look at the 5 year chart, MACD line is in the bullish movement. Yes, you could say a little bit of a slowdown coming in, but the volume has switched over from previously selling volume to buying volume. And once the data point ends, we'll see if it's substantially higher than the selling before. But right now, it is buying volume, and it's still in the bullish movement. So technically more upside. And if we look at the all chart, the overall trajectory is to the upside, and the volume is in the buy side and climbing, it looks like. So that's pretty impressive stuff. And if we look at the data points I'm going to show right about now in terms of, so Robinhood shows what their users, for the most part, I don't know if it includes all retail investors, but their users for the past 4 days, I believe, from the data point, I'm not looking at it exactly, but I'm going to pop it up on the screen, has been selling. So predominantly selling, except for the last day, it was still selling, but it was less selling than the past few 3-day trading days. So it was pretty much flatlined with the selling predominantly, which is pretty awesome. And the artificial pull down previously, so stabilized and went up. So I think that is a good sign. The reason why I'm stating that is because the 1 year chart, in my opinion, even though it's in the bearish movement, again, downside technically, but even though the volume is showing upside potentially, which is awesome. So I think this is going to be short-lived. The reason I'm stating that is because we're seeing that the data points from Robinhood showing selling, but we're still either flatlining and going up, and plus the indication for 5 year and all chart are ultimately showing upside, plus the market is showing upside, in my opinion. So I do post weekly market videos for the S&P, NASDAQ, and Dow Jones, but the reason why I want to show just one quick thing is because it's relatively, if the market goes up, it's less resistance to go to the upside. Like you have more support to go to the upside as opposed to more of a pull down, right? A little bit of tangent, sorry about that. But if you look at investor sentiment, right, which I do cover in my market videos, is right now for the week of January 2022, 2025, the bullish sentiment has increased substantially, 43.4%. Historical average is about 37.5%. And previous weeks, you'd seen it was just dropping, right? And the bearish sentiment has decreased substantially as well, from 40.6% to 29.4%. And I'm not going to go into depth of the whole entire market for the whole entire thing in terms of breakdown, but from what I've seen, S&P, NASDAQ, and Dow Jones potentially could start going back up now, right? And I've stated in my other video that there was a potential to go up in terms of the latest market video, and there was indication potentially to go up, and now it's pretty much solidified that it looks like it will be going up for sure. And if that is the case, less resistance for a BlackBerry to start going up, and I think this will be short-lived. That's just my opinion. Now, in terms of where we're heading in terms of price point, potentially could be asking, I think more so, obviously there's going to be resistance on the way up, right? I think there was some resistance I mentioned previously about the 460 to 480 range, and obviously clean numbers, $5 range will be resistance. But ultimately, I think we're heading to 550 to 580 range, $5.80, $5.50. The reason why I state that, like I mentioned before, is here's the moving averages. The 5-year chart, if we look at it, 200-day moving average is at $5.49. But I would say most likely 550 by the time we get there anyway. But these moving averages move with the price actions, obviously. So when we get there, it could be lower. So then obviously that will cause us a little bit more resistance, lower than the 550. And then the alt chart, the 50-day moving average for the alt chart is about $5.82. So between 550 to 582, let's just say 549 now for the sake of the data points, 549 and 582. I think ultimately we're heading there because after silence deal, yes, we're aware of the silence deal, but nothing's technically a done deal until officially it's a done deal. So when that happens, I'm expecting the stock to move up a little bit because we're already aware of it, but at the same time it's solidified. Plus, sometimes there's surprises with this management team in terms of good news that could be coming up throughout the whole entire time from now till the earnings date. And then by the time the earnings date comes out and they go through the earnings, I'm expecting a pretty good earnings in my opinion. Again, I do own shares in the company, so be mindful of that while you're watching this video. And with that, with the momentum that's happening, I think we'll be within that range. Now, it's not a guarantee, but if we do go through that range, again, it's not a guarantee, and I do own shares in the company, so be mindful of that. But $4.17 to the 550 range, let's just say on the low side, not at the 580, you're looking at pretty much a 30% return, a little bit over that. I think it's like maybe 31%, 32%, give or take, but 30%, let's just say. And then now, and sometimes when the earnings comes out too, the stock does a little bit dip or go up. It's kind of hard to predict exactly, but then within like the next few weeks, it just starts climbing up, especially with this new management team and the momentum and all that stuff. So let's just say worst case scenario by the month time frame. So you're looking at end of April, first week of May, pretty much a 30% return if I'm not mistaken. But again, this is just my opinion. I'm not a professional and I do own shares in the company. So just be mindful of that. Please do your own due diligence and research before buying and selling, but pretty good return if that does see fit and everything does roll as the way I'm thinking it might be rolling, right? Again, indications are pointing to the upside. A little bit of headwinds with the 1-year chart, but I think it will be short-lived with the market pointing to the upside. And the data points of Robinhood showing predominantly sales on their user base, but yet the stock was pretty much flatlined and went up. So it's pretty good. Not necessarily flatline, but it wasn't crazy upside, right? But that's basically it for today's video. If you did find it beneficial, consider dropping a like. It does help out the channel, so thank you so much for that. I do appreciate it. Thanks again for watching and supporting. Appreciate it. Take care. God bless and peace.